Welcome back, the accounting boffins out there. Yes. What are we looking at? We are dealing with the income statement. Our emphasis now is let's look at incomes. What are incomes that you could face within a business? Let's look at examples of these so that you know exactly what we're talking about. Number one, obviously, if the business is a trading business, it is selling goods, therefore definitely sales. If it has sublet a portion of its premises and it's receiving rental income, your other income would be rent income. Yes, when you transact with your creditors, you settle your accounts on time, you receive a discount received. I'm giving you examples of incomes. You have interest on fixed deposits or interest on investments. Whenever you invested money in a fixed deposit, you're getting a return, you're earning a return, that will definitely be an income. Commission income, you may be earning an income for sales and there may be a special commission that is attached to it, and as such, you may be earning a commission income. Bad debts recovered. Yes, a debtor who initially was written off as irrecoverable now decides to pay you, therefore that would be regarded as an income, bad debts recovered. Provision for bad debts, when it decreases, very, very important. Keep that in mind, that when you are decreasing your provision for bad debts, then that amount would be regarded as an income. Your trading inventory, when it is a surplus, yes, you will see when we do these actual adjustments why we refer to these as incomes. But remember that a trading inventory surplus will also be recorded under your incomes. And definitely, when it comes to asset disposal and you make a profit on sale of asset, definitely that is an income to the business as well. Now, what about your expenses? Just one more on the incomes before we continue. Maybe not featuring on your screen, but think about it. If a business sells goods and it also repairs goods, so it may be a trading concern combined with a service concern, therefore fee income or service fee income, that could also definitely be regarded as an income. Okay, moving on to expenses. Cost of sales. Yes, the goods that you are selling definitely did not fall from the skies. You had to buy it, and that was the cost of your sale. Clearly you can see an expense, okay? Rent expense, you may not have your own property, you may be renting premises, you have rent expense. Discount allowed, just as you are transacting with creditors, you are transacting with debtors as well. And if they give you a discount, it would be, if we are allowing a discount to our debtors, it's an expense to us, discount allowed. Like discount received was an income to us. Interest on your loans. If you're taking loans from your banks or financial institutes and you are paying interest, definitely that interest is an expense. All other operating expenses, certainly we can't go through each one of them. Yes, you've been exposed to this before. Telephone, wages, and the list is endless. What about bad debts? Definitely, when we writing off the account of a debtor as irrecoverable, it definitely would be an expense to us, bad debts. Provisions for bad debts, when we are increasing our provision. Remember, a decrease was an income, but an increase is an expense. Trading stock deficit, yes, due to theft, due to pilferage, due to breakages, any of that would result in trading stock being a deficit, definitely an expense. Just like we had a profit on sale of asset, you could get a loss on sale of asset. Definitely, that will be regarded as an expense. Depreciation, a very important one, which we refer to as an imputed expense. It's an expense that does not affect the flow of funds. But more about that later. Now, right now, remember, it's an imputed expense. It's a book entry. Directors' fees. We've dealt with this. Yes, sometimes called directors' emoluments, sometimes referred to as directors' remuneration. Audit fees. Definitely an expense to the company. Now, this is what your income statement looks like. Remember, you start off with your turnover, which is what? Sales minus debtors' allowances. Okay? Then you bring in your cost of sales, which gives you gross profit. You bring in other operating incomes. We've dealt with these already. Now remember, very important, excluding interest. Gross operating income, you have your operating expenses excluding your interest. You then have your operating profit. Now you bring in your interest income. Can you see on its own? Can you see interest expense on its own at the bottom of your income statement? Then you bring in your taxation, and that will give you your net profit or loss for the year. Now remember, this is just a format of an income statement. It is important for you to know this format. I can't overemphasize its importance. Please, accounting learners out there, make sure that you know the format of your income statement. And now, the end of this segment, but one more to go, and a very interesting one. So, don't go away. Stay with Matrix Uploaded, because you're going to learn from it.